So, welcome to today's episode, the audit and advisory profession. The CPA world, as we know, it is at an inflection point. Two powerful forces are reshaping the future: the private equity investment on one side, and AI and technology disruption on the other side. At SW India, we are based in India. We actively engage with this big question shaping our profession. And who better to discuss with than Alan Colton, one of the most respected CPA in US, advisor to leading firms, and someone who has been seeing the business of accounting transform over decades. Alan, it is real pleasure to have you here.
No,
Welcome.
it's
So,
it's it's my honor and privilege. Thank you for having me.
thanks. Pleasure is our all. Alan, before we start, the objective of this podcast is to educate CPA professionals, not only US but another part of the world, in terms of highlighting challenges around AI or change in business model on account of PE investment or around attracting talent. So that they can understand all these challenges. Same time, if we can provide some insight which can help them in terms of overcome these challenges. Obviously, it's going to be difficult to provide all solution around such big topics in 1 hour, but still, we the objective is to whatever maximum we can try.
I'm looking forward to it. I mean, I laugh because the last 5 years has had more change than probably the first 135 years in our profession. And my guess is the next 5 years will have even more change. So it's an exciting time for podcasts like this and to really talk about strategy and what the future is going to look like because we were what I would call a steady Eddie, unchanged, unencumbered, almost protected industry. And the fourth industrial revolution has hit the accounting profession right between the eyes. Yeah.
No, I totally agree with you, and I think I'm on the same page, especially on the next 5 years. What I feel as all the industries, or especially the technology and other, have seen a lot of changes. The invent of like Amazon, so Apple, and all that. And I think we were the only business or profession or business which was not subjected to such a change. I think the change has started and it's going to be a big change. Let's hope it benefit everyone.
Yeah.
So let's start big picture. And if you have to pick, what is the single biggest disruptor of the CPA profession today? Private equity or AI, or you think both, or something else?
Uh, yeah, it's a great question, and clearly private equity and AI are at the top of the list. I probably would add two to those. I think one would be just talent, although you could infer that that's built into both of those items. But accounting has become unpopular. The kids today getting degrees in accounting, the numbers have dropped dramatically, not just in getting the degree, also wanting to take the exam. And, I'm sure we'll talk about all the reasons for that. And then I think just the fourth one is transformation. I always talk in terms of the four T's: talent, technology, transformation. And interestingly, the fourth one is trouble, because I think a lot of the accounting firms are coming off their best back-to-back years they've ever had from an earnings standpoint. And I think they're a bit blinded, if you will, to not just the changes that you and me and many of our listeners see in front of us, but the speed with which those changes are taking place. So I would completely agree on AI and private equity, but I'd weave in talent, I'd weave in transformation. And you may say, well, what do you mean by transformation? Well, if I use AI and I think about offshoring, right shoring, which has probably been the single biggest spike of firms leaning into talent, not in the US, um, it paints a picture that by the year 2030, which is only 4.5 years from today, I don't think the accountant, at least in the US, will be preparing a financial statement or tax return anymore. I think offshoring and AI will completely take it over. And the strategic question really to ask accountants is what will you be doing in 2030 if you're not helping to create that product? And, we've talked many times before about this issue of being the trusted advisor. I think we have a 4.5 year head start to move from not just the trusted advisor, but to truly becoming the client's most valuable advisor. And, as you know, I think there's three kinds of accountants out there. I think there's ones that are already advisors to their clients. There's the second one that would like to be an advisor, but they're so busy being busy making the product, making the financial statement, making the tax return, they just don't have time. And then there's a third one. I worry about this one. It's the accountant that can only create the product. And I wonder when the year turns 2030, what will they be doing? So just big picture, strategic things to be thinking about.
No, I think, Alan, I totally agree with you. Apart from P and I think the talent and the transformation is a big challenge. And just to maybe give you a right a live or a instead, my son is studying in Warwick University in London. He's in the third year. So obviously, being a part of CPA, there is always a inclination that my son also do a CPA course and all that. But I am not confident that he should do, considering the kind of changes and the transformation it is going to be there in next 5 to 25 years. Maybe as the subject and the education may not be fit into that transformation is required. So that's I think we're going to discuss it, obviously. And I think on the transformation, I totally agree with it. Apart from adapting, I think the mindset challenge is a big this big luggage take our professional people, especially say who is older than 10 years of experience or 15 years experience. I don't know how they are going to overcome. They are going to be pushed to the wall. Only they will transform. I think that's a big question challenge we are going to face. But nevertheless, I totally agree with you.
If
And
I
just
may, I also have a son that's in his third year in public accounting. And when I talk at the colleges and universities to the kids, they say, why would I go into public accounting? AI is going to take over everything that we do. And I say, that's not true. They're going to take over a lot of the things that stop us from becoming an advisor. And it's going to actually free them up. As we say, it's going to push them in the fire. It's going to give them much more client contact at an early age. And I think we're going to have less burnout of accountants. What's the reward for a great accountant that does great work for the partners? The reward is they give them more because they're really good. And at some point, they walk in and they say, I'm out of here. I want to go somewhere where I can make a good living, but also have a balanced life. So I equate it to the old days we used to have stockbrokers. They used to pick stocks. They used to sit at their desk. They would look at data and spreadsheets and all of this. And today, those people, those stockbrokers aren't called stockbrokers. They're called wealth advisors. They manage money. And who's doing the analysis? Technology. There's algorithms and balanced managed portfolios. And what has it done? It's freed up the wealth advisor to get clients, work with clients on high level things, build relationships, and grow people. So their transformation, which interestingly, private equity entered maybe 15 to 20 years ago, actually helped them because it provided the technology to enable them to go from that trusted advisor to that most valuable advisor.
Yeah, I agree with you, Alan. Obviously, as we foresee, say we if we have to hire a people with 0 to 5 years experience, in traditional world we always think the person should have expertise of say audit or tax and all that. But what I foresee coming in years to come, I think technical knowledge will be a smaller part of the expertise which will be required. I think more respective with how good that person is in terms of adopting to the technology, using technology, because that's going to be the biggest attribute in terms of skill set, which has to be there in terms of that person you if you are going to hire. In our age, at that time, it was pure technical. If you are good in technical, you got into the job. So I think there's a
Yeah.
transformation it is to has to happen.
You know, Kunal, if I was your accountant, you would pay me money to give you a financial statement and a tax return. But the truth is, there's 45,000 other firms that can do
Yeah,
exactly that function. We follow the same tax code, we follow the same generally accepted accounting principles. But if I could come in because of my decades of experience of helping businesses and high net worth individuals to be successful, and I could spend time with you strategically talking about how to grow your business, how to improve your profitability, how to have a better process to recruit, retain, grow talent. If I could do those type of things, the fee you would be willing to pay me is 10x what you'd pay me today if I just give you a financial statement or tax return. I mean, let's think about it. A financial statement, you already know if your business was successful last month. I'm just giving you information that you already know, but your brain has already moved on to the next 90 days. So I'm sort of giving you, if you think about it, a report card of the past where we have to migrate the accountant is to be in the business of helping their clients with their business and financial problems, whatever they may be. And if I can do that for you, you're gonna ultimately buy a package from me. To get my advisory skills and expertise, you're gonna have to use us to do your financial statement and tax return. But if I can deliver on that, you're never gonna leave, no matter what the price is, because of
yeah.
the value that we're giving. I think that's the new awakening. I think that's the messaging that the young generation needs to hear. And I think when we talk about transformation, that's the transformation.
I think I totally agree with you. And the same motto I adopt in our firm also. You have to be value provider, value. You have to create value to the business of your client or solve their problem. Only then you are going to get the money. Otherwise, you have no distinction. There is no value. If you're just filing tax returns or financial statement, even audits also is very difficult to make a distinction between one firm to another. And sometimes I jokingly ask my fellow friends at Big Four, can you explain what is the difference among you Big Four is concerned? That's very difficult.
Yes. So true.
So
So
that's true.
true.
So just to take forward our discussion, Alan, on a private equity side, obviously private equity has made serious inroad into CPA profession last 3 years in US market and some part of the Europe also. Do you see this as the future of firm growth, or what do you think it is going to evolve in long term?
Yeah, I think private equity is here to stay. And it's not just in the United States, it's all over the world. It's interesting. The trend of private equity probably started more in the UK uh, with firms in London uh, a decade before it started happening in the US. I
Yeah,
mean,
yeah.
today of the top 10 firms in the UK, more than half of them are PE owned, and many of them are on to their second PE investor. But, this in the US, this started about four 4 years and 2 months ago. I think the first major firm to do private equity was Eisner
Certain.
Amper with Tower Brook Capital and Citron Cooperman with New Mountain Capital. And since that time, we've had over 20 platform deals take place. As a matter of fact, if you looked at the top 30 accounting firm today, more than half of them, we've crossed that halfway point. By the end of this year, we'll be at about 70% or 20 of the 30 top accounting firms have gone the way of private equity. So I compare it to when we sold our accounting firm, which was a long time ago. It was back in 1998 when there were three publicly traded companies. CBiz, who was the lone survivor, they're still
Yeah,
around today, and boy, are they thriving.
yeah,
American Express, the credit card company, they got in and got out pretty quickly. And H&R Block. H&R Block delivered 20 million tax returns at a certain segment of the market, and they tried to go to the other end of the food chain and found out that it wasn't working and got out of the investment. So that came and gone, sort of public companies, except for CBiz. This is, I think, private equity is in the bloodline, and it's never going away. And I think we're going to see in the next 5 years the move from those top 30 firms to the top 500 firms. Yeah.
so I know this data is not available on public domain. What do you think? How much P must have invested in, say, in US market in last 5 years? High level estimate.
Yeah, it's become a very popular question. So I've thought about it, and what I've done is I've just started in my head thinking of the enterprise values of the. I think there's probably been close to 100 deals that have gone on,
Yeah,
either where private equity has a foundation firm or a mothership firm, or we've had these roll-up companies that are PE owned, and then they bring independent firms together. But there's been over 100 transactions. And then there's all the add-ons that go with it, where obviously cash is being deployed.
yeah.
I would guess that we have probably by the end of this year, that'll be 5 years, close to $50 billion has
There's
been
a big,
invested in the accounting profession. Yeah, it's a scary number.
yeah, the
And
big number.
if you're, yeah, yeah.
If you want to put a guess head, what could be the number in next 5 years from this 50 billion to what do you say, think?
Yeah, well, I think by definition, it has to be at least another $50 billion,
Yeah, definitely.
because so many of these platforms that, originally sold at a 9, 10, or 11 multiple in today's world are selling at a 13, 14, 15, 16 multiple.
Okay.
And the EBITDA that they came to the table with, the equation of private equity is EBITDA times multiple equals enterprise value. And so as EBITDA and enterprise value and multiples have all soared through the roof, there'll be at least another $50 billion being invested in the next 5 years.
So, so what trend you are seeing in terms of the valuation of such firm is concerned, where the firms are able to get higher multiple, which are these categories of firm without naming, and obviously on an average, other side of the firms, what do you think? These are two different categories.
Yeah, so I'll try to answer the question this way. If me and you sat down and looked at the top 100 firms, we would quickly put them into three categories: great, good, and average. How's that? Maybe I'm being a little generous.
Yeah.
Um, and we would say, what are the criteria that we use to make that? Well, one of them is we're looking at the quality of the leadership of the firm, which does matter. Number two, we're looking at their track record of organic growth. Number three is profitability. Number four is the reinvestment in the things we've talked about: technology, talent, transformation. Next is probably the scalability of the business. Number six is we're looking at the culture of the business. Do they have great talent? What does the bench look like? Are they what we would call a destination place that young talent wants to go to and stay and grow their career? We'd probably look at the success they've had with doing M&A,
Yeah.
and also the success they've had with what we call free agency or stealing stars. What's their ability to go to other firms and sort of poach away those high performers and bring them over? And, at the end of the day, we're putting an assessment on what their enterprise value is today. And if they were to combine with us, would we be better together? As you know, bigger isn't better, better is better.
Yeah.
So the strategic question really the last 5 years that firms have been asking is if we combine resources with a strategic and a capital partner, what can we achieve faster and better than if we stayed on our own? There's many firms that aren't going the way of private equity. I mean, some are very brazen in their comments. They equate it
Yeah.
to
Openly saying.
very negative things, and they say, look at
Yeah.
what private equity did to the hospitals, look at what they did to medical practices, and you know what? They're right. However, look what private equity has done in insurance brokerage. Look what it's done in wealth management. Look what it's done in consulting, advisory, outsourcing, valuation, forensic. I mean, uh, it's been a great journey both for the private equity firm and for the owners of the stock of the company being acquired. I think the one thing that private equity figured out this time that the public companies didn't figure out 25 years ago is how do you create a mousetrap to recruit, retain, and grow top
Yeah.
talent? And the
Yeah.
answer today, if you're 20 or 30-year-old or early to mid 40s, is you want a piece of the rock. You want equity at an early age so that every 5 years that equity can appreciate
Yeah.
and you can build wealth. That's been missing from the accounting profession. So independent firms will continue to thrive. It's a business. If you do the basics of a great business, uh, you'll always do well. But yeah, I think private equity's impact, at least we're seeing it now, is they're going from the top 30 down to the next 500. So private equity will be in the bloodline of this profession for a really long time, if not forever.
No, no, I totally agree with you. I think, Alan, obviously, I also get some this negative questions about P and all that, especially on people with a very old-minded and then obviously I counter them in that if you see the startup world which has emerged in last 15 to 20 years, these are all being backed by P investments only or the venture funds. So if they can involve to a multi-billion and trillion economy and grow, how can we being a accounting profession can't grow? So that's the one takeaway they have to carry forward. And second is obviously they are putting millions of dollars and billions of dollars. They are not going to lose it. They are not here to lose. And they understand the importance of the people and all that because especially in our profession, it is all driven by the people. It is not any technology and other. So I think they are going to be hard in taking hard decisions and aggressive and all that, but they are not going to be fool in losing the money also at the same time.
Yeah. It's interesting. What PE has really done is they've raised the bar of performance.
Yeah, yeah,
People always talk about how they're going to destroy or change the culture. Uh, I think what they're doing is making the firm more successful. They're making more decisions, faster decisions, tougher decisions, and deploying capital. And if you have the right strategic combination between what private equity wants out of the investment and what the accounting firm wants and needs from the strategic and capital partner, really good things happen. If I just think about the 20 platforms that are out there today, I don't know of one platform that is struggling. I don't know of one that's not hitting their goals. Now, one could argue that, the first 20, they just went after the highest performing firms and did really well. It's fascinating. We co-host a PE summit every year with Accounting Today. And many of my clients, friends that want nothing to do with private equity come to that conference And I say to them, what are you doing here? And I'm expecting an answer is, stay close to your friends, but stay closer to your enemies. And that's not what they say. They say, we want to increase the performance in our independent firm, and we think we can learn from private equity certain things on how they've increased accountability, how they've increased performance. And we're not going to go the way of private equity, but we think using some of their methodologies that can make us a better and stronger firm. So for the fiercely independent firm, I've been involved in many rewrites of their partnership agreement. The
Yeah,
agreements never anticipated these accounting firms were worth anything, and now they're worth 3 times the stated value internally. So that's also created a revaluation of the business. So
yeah, true.
revaluation, changing the partnership agreement, and then deciding on this issue of capitalization. If we're not going to go the way of private equity, how will we create capital? And what some firms have done is they've either raised the commitment of capital as a percentage of compensation that the partners need to leave in the business. They've reduced the retirement benefits on the backside. They've gone to the bank and taken on debt.
Yeah,
And interestingly, it's not just, we always talk about private equity, but quietly there's other investors that have come into the playing field: pension funds,
yeah,
sovereign wealth funds, family office, individual billionaires coming together to acquire firms.
yeah.
So this playing field continues to expand almost daily of who's coming into it.
No, I think there's a big opportunity which is available, and obviously, as we understand, our profession, accounting profession, is a good, reasonable margin profession. I think the challenge, especially mid-size and small size firms face is in terms of investment, the money which is required to reinvest in terms of retaining or attracting the right talent. I think that was a big challenge, which this money supply or the investment from various sources are helping. I think the biggest thing which obviously you have alluded in terms of the various reasons why PE is getting the opportunity in terms of. I think from my point of view, what I feel being in 25 years, we an accountant are not very risk averse. We are not ready to take risk. And every before any business to grow, you have to take risk. So I think that's where I think PE, with the being a partner on your side and money power, they are pushing the accountants to take the risk also. I think that's where I see the big challenge. Obviously, there are exceptions within our profession or accounting profession. There are people who are ready to take risks. But what I see, have seen majority of the accounting profession, they are not good in taking risk. They are good in business advisors, but when they have to take risk on their side, they are very risk averse.
Yeah, I couldn't agree more. The one place we're good on risk is uh, is looking at the risk of an audit. but 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 taking and going and borrowing money, we as accountants, we like to do things on the cheap. We like to get a
Yeah.
bargain. We would prefer to rather than hire experts to run our business, we would rather be what we call the great dabblers. We keep our book of business, and at night or on weekends, we sort of manage the business on the side. The
Yeah.
complete opposite of their most successful clients that have given up, if you will, the production part of the business. They're thinking strategically about how to grow it, how to improve profitability, how to win the war, for talent, all those kind of things. Yeah, I sometimes pinch myself or pinch others just how fast and furious the level of change has gone on in the profession. Everything that's happened in the last 4.5 years ago, back, if I roll the clock back to July of 2021, everybody called it the lab experiment. And they kept looking at 25 years earlier when public companies failed, and they said, this too shall pass. Well, it hasn't passed. It's actually done incredibly well. and it's redefining the profession literally overnight. And I'll get a lot of people that will talk about the influence that private equity could have on the audit. And as the story goes, the private equity owner would go over to the head of the audit segment of the accounting firm and suggest they look the other way on a portfolio company or something, anything that would compromise their independence. And the absurdity of that is that will be what we call a reportable act. The audit leader would be required to contact whatever government agency that is, whether that's
Yeah.
the Public Company Accounting Oversight Board or the SEC, and the entire investment would blow up. What I do know is the alternative practice structure, which separates and insulates the audit from everything else, tax, consulting, advisory, has now been around for almost 30 years. And
Yeah.
I've asked the law firms that specialize in the structuring of these deals, have they ever seen an audit go bad because of the influence of a third party investor? And the simple answer is no. Now, it's interesting because there have been a lot of bad audits of independent firms over the 30-year period, but never has there been a bad audit because of an outside third party having an investment in the business. So, um, it's working. Sometimes when I talk to the government or the regulators and they ask questions, I have to remind them that it was them that came up with this brilliant idea, and it seems to be working.
No, I think if that's the they take it, that's a risk. I think there are a lot of other risks which we all know in our profession. I think that we need to mitigate first that the audit can be blown for that risk. Firstly, then this kind of the investment or the alternative structures are concerned.
Yeah.
No, that's true. That's true. I don't know why the people see one side of the risk. That's why I think, as I told you, the accounting area. But I see an opportunity if Ps are investing in, say, mid-segment firms, whereas otherwise these P portfolio companies, all the work related to the P firms or was dominated by Big Four only. Now, if P are ready to invest billions of dollars in mid-segment work, so they have to raise question to themselves why we are going to Big Four the work, rather let's use it or leave it audit the part, but there are a lot of non-audit work which was primarily being done by the Big Four only. Now that's get these firms get an opportunity to do that work because that mindset of P or large investment community was that for all investment angle we have to go to the Big Four or rely on Big Four only.
So I think you just asked three questions in one, but let me peel it back a little bit. We've talked in and out about the Big Four, and the question everybody wants to know is what will happen to the Big Four? I believe that 5 years from today, maybe sooner, that could be 3 years, it could be 4 years,
Yeah.
the Big Four as we know them today will no longer exist.
Yeah.
Number one, I believe audit will separate from tax and consulting. Number two, as you know, the Big Four market themselves as global firms, but they're really only global brands. Every country is insulated. They have their own decision making, profitability stays, and from a legal liability standpoint, they're insulated to the acts that go on within the country. What Grant Thornton is doing through New Mountain Capital, I believe, is creating the first true global firm. They're using capital uh, in the US to
Integrating.
go out and
Yeah.
acquire other
Yeah.
firms. So the Big Four, I think, is simply too big to go the way of private equity. I don't see that happening, but I do see the Big Four going the way of an IPO, public
Yeah.
company offering. So I believe in, I don't know, 5 to 8 years, I think we'll have 8 to 10 publicly traded accounting firms. I mean, we have one today with CBIZ. There's rumors that three different firms that begin with an A will be going the way of an IPO, Anderson Tax,
Yeah,
which would then create a global firm, Alvarez and Marcel, and one that's been around forever and is already on their third, fourth flip is Alex Partners,
yeah,
a restructuring and solvency forensic firm. So I think you're going to see on some of these platforms of the larger accounting firms when they exit in 3, 4, 5 years, it won't be to a larger private equity firm. It will be publicly traded. And again, we'll be on a call in 5 years, and I wouldn't be surprised if you told me there were 8 to 10 publicly traded companies. So definitely the universe is changing.
no, I think I totally agree with you. Big Four is big enough and is going to be very difficult for P to get into that because of their business model, the global landscape, and all that. So obviously, to safeguard themselves, I think it will be good for the big fours to get into the public market so that they are safeguarded. But otherwise, on the other side, I think P is going to create an alternative or a big structure in comparison to them to disrupt them. So that's where I think the journey has also started. I don't know whether you have heard also or not. Warburg Pickers have invested in a firm called Unity Advisor in UK. Basically, this firm is just a boot start, being started by the ex PwC chairman and one of the very senior leadership of the ENY. And Warburg Pickers have given us the war chest of $3 million to start firm and pulling out the people from Big Four in UK and build the organization.
Yeah, it's the beginning of a trend that we're seeing playing out in real time almost daily now. The biggest trend I think has been the acceptance of offshoring. I mean, if I had to pick one thing, firms today believe that the best margin play
Yeah.
next to AI. Look, if I can take 200 people hours and get them done at the flip of a switch, what an amazing savings. The question is, will the market let us share in that increase in profit on the savings? But the ability to send work uh, internationally today and get done at $25 an hour, what historically was $125 an hour, give or take, um, that has been, I think, something that firms have really rallied around. And they're
Yeah.
finding they can get audit work, tax work, consulting work, uh, home office type things, forensic work. And it's not just at the entry level, it's staff, senior supervisor, manager, senior manager, director, principal, all the buckets with all the services today can be done somewhere else, and the model is working in ways we never thought. I mean, I work with firms that today 5 to 10% of their revenue is now done through offshoring, and their goal is to get it to 25%. And I think we always used to make fun of the big four that they had 50,000 people sitting
Yeah.
in some country. Well, guess what? They just were a little bit ahead of the time. And
No,
and
that's
and the other trend I think, and it plays into what you were just talking about, is I was sort of warned about this. Somebody said to me, once one private equity firm cracks the code, they'll all come pouring in. And that's what happened on the big stage. But now I'm seeing it on what I'll call the middleweight or the welterweight. Private equity firms coming in looking at companies 50 million of revenue to 200 million. And at the same time, I'm now seeing private equity looking at companies of 5 million to 50 million. So they hit it at the big level, they're coming in at the middle level, and they're now starting to come in with the smaller to mid-sized firms.
yeah.
And if you play that out over a period of time, the question of will private equity go away? The simple answer is never, because it's getting in at all different levels of all size firms.
No, I agree with you. I think PE is also innovating their model. As you mentioned, lastly, Ascent and CRED Professional are example of this. They are just integrating the smaller firm to make it a big platform. and take it forward. I totally agree with you.
Yeah.
Uh, and Alan, just on this P topic is concerned, I think on a last question, and ultimately all these billions of dollar investment, they need a exit at a high at a profitability. So how confident you are that P will able to make good money in terms of listing in some time in future is concerned, or what do you say? What are your assessment?
Well, I would start by saying that supply and demand. This is the number of companies wanting to do a partial sale to private equity, whether that's called majority or minority interest. But this is the abundance of the companies, I can't even fit on the screen, that want to come into the industry. So
Yeah,
for every one potential seller or partial seller, because in all these deals they have equity in Newco, let's not forget
yeah,
that's a huge driver for them. What they're really doing is swapping equity. You know, as one said to me, I'm swapping equity in a worthless business called an accounting firm, and I'm getting equity in something that'll be worth 4 to 5 times that in 4 to 5 years.
yeah,
But as that goes on, um, I think we're going to see changes happening that we can't even define yet. You know, every day
I
I wake
agree.
up and I see something happen, and I say I've never seen that before.
Wow.
And here it is. It's,
Yeah,
a wealth management firm buying an accounting firm,
yeah,
a major top 10 accounting firm doing an ESOP, many major top 20 firms selling their wealth management business as a way not to do private equity, but as a way to
yeah,
create the capital to handle the investments in technology and talent and transformation.
yeah,
Mergers of equals, top 15 firms combining with the intent of not doing private equity, but combining together to stay as a independent firm. So what an exciting time to be in public accounting. I almost feel like the first 135 years, this profession started in 1887. We did two things. We did financial statements and tax returns, and we
yeah,
were almost in this protected shell. Even when there were recessions, you still needed a financial statement and tax return. And I look back at these last 4.5 years, I literally sometimes say to myself, is this a dream or is this really happening? And
yeah.
it's really happening. And as you know, me and you will get off this podcast and we'll take a call today, and someone will have a question or tell us about something, and we'll say, that's never been done before. And
No,
here
I
we go
agree.
again. Yeah.
No,
But
I
I
told.
think the biggest question the accountant needs to ask themselves is, in the year 2030, if I'm not going to be preparing a financial statement or tax return, what am I doing to grow professionally today
Yeah,
to be worth more to my firm, to be worth more to my client, to justify a higher billing rate?
yeah.
And I've got a head start on this. So becoming that advisor that I've always wanted to become, but didn't have the time, now I'll have the time. But if I want to become an advisor and I don't have those skills, my education, my CPE, my continuing professional education needs to change maybe a bit from some of
Yeah,
the technical audit and tax courses to how to think strategically, how to advise a client on how to grow a business, how to advise a client on how to improve their profits, those type of things, the recreation of the account. And boy, there couldn't be a more exciting time than there is right now.
no, I think I totally agree. Otherwise, if they don't transform, they'll be redundant because that's the big. I think, as you rightly said, last 130 years, obviously we were in a protected environment. Every year, this audit has to be done, tax return has to be filed. Even there is a drought, there is a recession, and all that. But considering the next 5 years, if you are not able to transform, you will not. The AIs and other software platforms are going to take over your job of all this audit and accounting, financial statement, and tax returns are concerned. So that I think there is an opportunity ahead of us also, but there is existence challenge for us also at the same time.
Mhm. we always tell firms that if the change uh, outside the firm is moving faster than the change inside the firm,
Yeah, yeah,
it's only a matter of time. Yeah. And if I've learned one thing in 45 years in the accounting profession and over 100,000 hours of consulting to firms, that change only happens in firms when the change itself is deemed to be better than the status quo. And right now, the status quo is pretty good. Firms are making really good money.
yeah.
I work with many firms that have had back to back to back record years. So to talk about these changes at a time where we're doing so well, where sometimes it goes in one ear and out the other. Yeah.
No, I agree with you, Alan. Maybe your last point on this. I was speaking with some big law firm in India. Obviously, that's going to be difficult. But I asked the question: why see accounting and law firm can work together under one roof? Because the kind of this transformation is happening on AI side. Till the time we bring synergies and value and solve solution to the client under one model or one service model is going to be difficult for this. And just to give you obviously I discussed sometime some long back this question to my one of fellow lawyer. Yesterday I came to across to a one AI law legal firm which is called Harvey.ai. This lad founded this 7 year old lad founded this firm in 2023. In 3 years, the valuation of the firm is $5 billion.
Wow. That's
Just 3 years, 27-year lad.
it's incredible. Oh
Yeah.
my. Yeah, I know we're coming up on time, but you mentioned about law firms and accounting firms coming together. So in other countries around the world, that's commonplace. The
Yeah.
accounting firm, the law firm, the bank, the insurance company, the wealth management firm is all one.
Yeah.
And one-stop shopping, as we like to call it. I work with many law firms that advise on these private equity M&A deals, and they see that the accounting firms are trading at 2 to 3 times their revenue, and they do the numbers with themselves and say, if we sold our, the problem we have in the US, and I'm not sure, I don't know enough about the legal profession outside the US, but there is a rule, and this is what stops it from combining.
Yeah.
We as accountants can protect the
Cannot.
business. We can get our people to sign non-solicits. You can leave, you can make a living somewhere else, but for a period of 2 years, you can't solicit any clients or people.
Yeah.
Private equity will write a big check to invest in an accounting firm because they know the people can't leave or probably won't leave the
Yeah.
day after. In the legal profession, the ethics says you're all free agents. You can
Yeah.
take if you're not happy, you can take your clients, and you're not restricted from walking out the door and leaving
Yeah.
with them. So
Yeah.
private equity always says to me, why would we ever invest in a law firm? We'd have no protection.
Yeah.
The
True.
the
True.
business could leave tomorrow. So until that piece of their ethics changes to allow the firm to protect and hold the client or make it very expensive for the departing attorney to take it, you know, and pay a lot of money,
Yeah.
private equity won't go into the legal profession.
No, I agree. I think as you rightly in like in US also, India also, the law legal is very protected due to some regulation. But topic for different point of view. And just to carry forward, Alan, although we have already, I think, we discussed a lot about AI in our discussion till now. So, what do you think? Do you think smaller and mid-sized firm who don't have bureaucracy or could actually leave for a larger firm by adopting AI faster, or they will face investment challenge, and that's where they are going to consider PE for investment.
I think it comes back to this issue of it's almost not about AI. It's about creating a business model that can be successful. I remember 45 years ago hearing of the demise of the sole practitioners. All
Yeah,
sole practitioners will go away. Well, In the United States today, 33,000 of the 45,000 firms are sole practitioners. 10,000 have 2 to 3 partners. 43,000 firms of the 45,000 in the US have 4 partners or less. So obviously, the sole practitioner and small firm has found a place. I think it's about getting the best talent, having a strategy of how to deploy that talent, and being the best in class in terms of performing both in the services you give to the client, the rates and fees you charge, and at the same time growing your people. We always talk about these accounting and tax firms like they're accounting and tax firms. That's what they do. But what they are at a more basic level is people businesses.
Yeah,
People businesses with a great strategy, with great leadership to execute that strategy, and having a culture and a value system that attracts great talent will always thrive, no matter whether they're private equity owned, independent, big, mid-size, or small. Smart business, as we like to call it.
no, Alan,
So, yeah,
please, sorry.
yeah, no, I'm done. I'm good.
So Alan, just on the, I think as on your last point to attract the right talent, I don't know. I think as we alluded earlier, that's a big challenge accounting profession is facing in terms of attracting the right talent. Maybe because of our the roles and the kind of work we do, or maybe there are more better works or alternatives these kids have to explore in terms of in their career is concerned. So what do you think? Obviously, one is price point, which is obviously there is a gap between, say, someone is on the tech side or consulting side vis-a-vis the traditional audience is concerned. So one is to rectify that gap. Obviously, how it is going to be rectified is a big question mark, which has to become. But on the other side, how to attract the talent is a big, I think, challenge we all are facing worldwide. Even with the PE investment, also I feel I don't foresee that that answer. There is an answer to that challenge is concerned. Obviously, the gap is being can be built through that P or the money investment point of view. But on other side, what do you think? What should we do to attract the people? Well, that's a big challenge.
Yeah,
And sorry, and just sorry, especially when we are want to transform from a traditional tax accountant or a tax advisor, tax preparation to the financial or to a advisor, where you need a better talent, skill, and other things are concerned.
yeah. I'll come back to this issue of strategy, leadership, partners slash owners on the same page, wanting to build the same thing. Where I find businesses go sideways and don't have the success of others is either they have a poorly executed plan, they have a plan that doesn't make sense from the beginning. They're trying to be something that sounds good but can never be reached. Uh, I find that the most successful firms, it's almost less about what they do, it's the alignment of what they're trying to achieve. And to me, the if you said pick one thing, Alan, I think it's the leadership. Question to think about for all firms. How is your firm managed? And what I mean by that is, do the partners run the firm, or does the firm run the partners? I will tell you that in firms where the firm runs the partners, substantially more success. I would also tell you I use the term country and country club. When you're a country, and what that means is a high level of accountability. We do what we say we're going to do. My individual goals are aligned with my department goals. My department goals are aligned with the firm goals. Uh, and our compensation pays us for the achievement of those goals. That to me is what I call a country that's high accountability. The opposite of that is what I call a country club. We may look big, we may have a lot of partners, but we're a lot of little businesses in one, and we have very little in common other than our name. Everybody does it a different way. And if you think about it, the most successful firms do it the one right way. They have one tax software, they have one audit software, they have a policy on billing and collection. Everybody runs the play that's called, which creates efficiency. Efficiency in a people business leads to increased profitability. Increased profitability leads to increased EBITDA
Yeah,
and
yeah.
or enterprise value. And last time I looked, the firm that provides the best service gets the best fees and can then use those fees to recruit, retain, and grow talent. It's sort of like the circle of business life, repeating itself on and on. So maybe over the years I've come to realize that size of firm doesn't matter. Industry niche doesn't matter.
Yeah.
Service line doesn't matter. It's what are we going to be really good at? And then let's go execute on that with a high degree of accountability, tie compensation to the achievement of the results, and great things happen. Just like a doctor talks about good hygiene, we as accountants, doctors talk about great hygiene, the fundamentals of business. And that's why you have such an incredible business, so successful business, a great culture and a great reputation. You build it and run it the right way. That's what that's what more of us have to do.
No, I think I totally agree with you, Alan. That's why I learned in my entrepreneurial journey also when I switch off from job and to start. That one formula I was very clear. Till the time we are not going to earn the money, we are not going to get provide the best services, and if we are not going to best provide, sorry, if we are not going to provide the best services, we are not going to earn the money. If we are not going to earn the money, we are not going to attract or retain the talent. So it's a vicious circle.
Yes.
If you break one, you are out of the race. So I totally agree with you, and that's where I think one of the reason why the firms who have not grown, they were not able to adopt this vicious catch hold of this circle is concerned. So they were because they were the profit was either just centric to the partners only, or they were not enough profit which can be distributed to all levels in the firms are concerned.
Yes. Completely
That's
agree.
that's there's a chance. Uh, I think just on this last point, maybe I'll put through just for your thought. Obviously, in terms of attracting the talent, future talent is concerned, especially the kids we are going to come from the colleges and the school. Obviously, we have to, at firm levels, at standalone level, we have to remodel or reshape our strategies, which distribute higher payouts and higher beta to retain all that. But I think one thing which we all accountants and CPA firms have to come together and put showcase to these young people at colleges to highlight what in terms of attracting the talent is concerned, because that's where the disruption has happened, where the students are not attracted. So I think on that side also, maybe regulators like at US regulators, PCOBs or other regulators may have to take initiative on that front.
Yeah. Yeah. Tough, I agree with what you're saying. It's a tough question to answer because every firm, people always say to me, they say, "Oh my God, you've been consulting to accountants for 45 years. What a boring existence." And I always say, "Well, it could be worse. I could be consulting to actuarials." But if there's one thing I've learned over this time, um, it's all the things we've talked about. It's that you have to have the strategy and the willingness to make tough decisions, fast decisions, lots of decisions. And you just, in the game of business, you just have to get it right a little more than wrong. I remember
Yeah.
one of the legendary leaders, Jack Welch, the iconic leader of GE, had more quarters of increased profit than I think to this day anyone has ever had. And what he said is that the best of the best leaders that run businesses, if you get it right a little more than half the time, in other words, if there's 10 decisions to be made and you get it right 6 out of 10, you're going to have a sensational business. Me and you might look at that and say 6 out of 10, that means you were almost
Hmm.
wrong half the time. His belief is be right a little more than half the time, but make
Yeah.
lots of tough decisions,
Yeah.
and that will elevate you versus your competition. Sam Walton, the legendary leader of Walmart, we used to say, Sam, how do you have such success? And he says, I get in the river in my boat and I
Hmm.
start rowing and I look which way the competition's going and I row the other way. We all have to have something that is unique. We call it the unique self. What is it that you're going to be the best at? Because if you're the best, you know what? You can charge the highest rate and get
I
it.
agree.
Yeah. Yeah.
No, I agree, totally agree. Till the time we are not best, is going to be difficult for everyone.
Yeah.
Alan,
Yeah.
I think we have taken more time than the schedule also.
Thank you.
Maybe a key takeaways to accountants if you want to summarize to them in terms of helping to understand.
I think the biggest takeaway is eyes wide open. Change is happening faster than we ever could have anticipated it. And while we may be doing well and having our best year or our best back to back years, we have to look at the future, the next 3 to 5 years, because it is changing exponentially right before our eyes. And as I always
Yeah.
say, what got us to the dance will no longer get us to the dance. And we need to begin to be thinking about creating that firm of the future today. And we have to have alignment of our other partners that have the same willingness to do it. I've also observed along the way that the firms that set goals, have high levels of accountability, and tie the performance to the compensation and reward accordingly seem to always outdistance the firms where those kind of things don't take place. It's the basics of running a great business. And I'm watching, if you will, separation of accountants, accounting firms, great, good, and average. And, sometimes I talk to average firms and I say, do you want to be good? And you know what they tell me? They say, we'd like to be good, but not if the pain to gain is that much. We're happy to stay as we are. I talk to very good firms and say, do you want to become great? And some do, and some don't. The ones that do, though, they have to have everybody aligned to want to
Yeah.
make that commitment. The
Mm.
ones that don't sometimes would like to, but they can't get the consensus to do all the things we've talked about.
No, no, I totally agree. I think to make great or you have to or leap forward to the next step, you have to make all the stakeholders, not only the partners, but I think all the stakeholders to understand why the change is required and then adapt to the change also at the same time. At the same time, has to follow the carrot and stick policy also so that the change happens also. That's also important.
Yeah, yeah. Well said.
So, Alan, this has been fascinating discussion. We have explored how private equity, air disruption, and challenges are converging to reshape the profession. I think the big takeaway for me is the change is not coming, is already here, which you have just mentioned. For us at SW India, conversations like these are important because they remind us that the CPA profession must constantly evolve no matter where you are. And the winners will be those who adapt fast, keep imagining their business model and value. Alan, thank you. from the bottom of my
Thank you,
heart
Kunal.
for sharing your thoughts and to your views. Don't forget to share thought on today's question. Until next time. Thanks, Alan. Look forward.
Thank you so much. Great talking to you. Thanks.
Bye. Bye, Alan.
Bye bye.